For the first time in over a year, I have sold a significant stock in my portfolio. Why did I sell? Is it going to be a mistake? And what I'm doing next with my money in this video. Now, pardon the lack of usual editing. This is breaking news and I made my sell decision within minutes of the market closing. So I'm trying to get this to you as fast as humanly possible. And I promise there'll be valuable information for you and it'll be worth it. Let's do it. The stock we're talking about today is Ttcf, ticker Ttcf. I exited my position for a loss of about 17%. So here's our agenda for today. Take a good look and then we'll get right into it. But up front, I want to say that this is not a rush decision. I've been thinking about selling Ttcf for the past few months. Do not blindly follow me, and it is okay to take your time. Remain level-headed, calm, and remember that emotion is the enemy of investing. Knowing that you took your time and looked at all the information you have and made a logical and reasonable decision for you will mitigate any frustrations, regret, or feelings of shoulda, coulda, woulda later on, because that stuff will not get you far in investing. So we'll start with why I sold and why I sold for a loss. However, before we jump into that, I was supposed to make a video today, a really nice one about Celsius, and I have a sponsor lined up for that video as well, but I switched it to Ttcf because this is more urgent and important. So with that said, I'd like to introduce you guys to Masterworks, the sponsor of today's video, and also the tech platform valued at over $1 billion. They let you invest in one of the best performing asset classes of all time, contemporary art. It's no secret that billionaires have nearly unlimited access to stocks, real estate, and private equity, but market watchers say that their art holdings could actually have the biggest payday. Recently, the Wall Street Journal declared that art is among one of the hottest markets on earth, and it's been that way for a while. From 1995 to 2020, fine art has beaten the market by 174%, and also nearly doubled the appreciation of real estate, gold, and 90% of other cryptocurrencies during this time. And because of its extremely low correlation to the stock market, as highlighted here by Citibank, it's an awesome tool to diversify any portfolio and protect your money from market volatility. Now, typically, only the ultra wealthy have access to this exciting asset class. But with Masterworks, people like you and me can invest in multi-million-dollar paintings from famous artists like Picasso, Andy Warhol, and Banksy. For example, as a more conservative art investor and a beginner, I wanted to invest in one of the most stable artists on the platform. So I decided to invest in Basquiat's all-colored cast. Similar Basquiat works have appreciated at 22% per year, and Basquiat holds the record for the most expensive painting sold by an American artist at $110.5 million. Also, Basquiat is huge in the high-end market with 116 million total sales in 2020 and already doubled that in the first 2 quarters of 2021. As this painting fits my risk-return profile, I simply selected the amount of shares I wanted and invested $500. Now I can wait for the painting to be sold, or I can sell them in the secondary market just like stocks and crypto. If you want to start investing with Masterworks, there is usually a waitlist, but I was able to get you guys a link to skip that waitlist, so check it out down in the description below if you want to start investing in fine art and support the channel. All right, now back to Ttcf. Now back in August, I actually made this video on my plan to sell Ttcf stock using an option strategy. You can check that video out if you'd like. Around that same time, on August 18th, I made a video for our investor community, and it's a red flag that I really wanted to highlight with Ttcf and what led to the creation of this video for everyone else. So this really boiled down to their financials, management, and their ability to manage expectations, and my conviction. So the biggest red flag at this point in time for me was their adjusted EBITDA. You'll see on May 3rd, 2021, they share their full year outlook for 2021 and adjusted EBITDA in the range of $2 to $4 million. You'll also note gross margin in the range of 20 to 25% and revenue of $235 million and $242 million. But let's focus on adjusted EBITDA. So with full year guidance of positive $2 to $4 million in adjusted EBITDA, their first quarter came in at negative $3 million in adjusted EBITDA. However, they tried to save the day here by saying they expect adjusted EBITDA to increase sequentially throughout the remainder of the year. And it's like, okay, start with a loss, and then as adjusted EBITDA increases, it will turn out to be positive, slightly positive by the end of the year. But that did not end up happening. Later on, they adjusted their adjusted EBITDA guidance to a loss of 14 to 17 million for the full year 2021. And keep in mind, if you're worried about maybe they were impacted by one-time expenses or irregular expenses, adjusted EBITDA, the metric we've been looking at, does account for and remove various one-time, irregular, and non-recurring expenses from EBITDA. So this already accounts for all of that. And we just received their Q3 earnings today, and adjusted EBITDA came in at negative $5 million, and we will get to revenue in a second. But also, their gross margin was at 10%, whereas previously they guided for 20 to 25% for the full year. Furthermore, their full year outlook for 2021 sees adjusted EBITDA at negative 18 to 20 million, again starting the year at an outlook of positive 2 to 4 million, and it's really just only gone down every quarter. And for the first 9 months of 2021, adjusted EBITDA was negative 14.7 million, meaning if we take their most conservative adjusted EBITDA forecast, next quarter should come in at about at least negative 3.3 million in adjusted EBITDA. Now on the bright side, maybe that means that adjusted EBITDA will start improving from here on out, because this quarter was negative 5 and maybe next quarter is negative 3.3. So maybe this is an inflection point and I'm making a mistake, right? I can always be making mistakes. Nobody is perfect and I'm certainly not. And yes, you can make the argument that I should focus on revenue and not a profitability metric like adjusted EBITDA because they're in their hyper growth phase. However, this not only has to do with profitability, but also being able to trust management and their guidance. Also, a company that was previously profitable is now extremely unprofitable. And also, if we take a look at their revenue, they are still missing on their revenue estimates. They're still missing estimates from Wall Street. Now, it'd be a different story if they were blowing out estimates and yeah, profitability suffered a bit, but they are not even meeting analyst expectations in terms of revenue growth. And this is not the first time that Ttcf has missed on revenue. They missed last quarter as well. I would ideally like to be invested in growth companies that are able to beat expectations and raise guidance, not miss expectations and lower guidance, especially in back-to-back quarters. And if you watch my channel, you'll know I love staying patient with stocks. I even love investing in turnaround plays because that's our advantage as long-term investors, is we don't have to time it perfectly. But because I no longer trust management, I have no idea when they'll start executing, if they'll start executing, and how quickly I will be able to see an appreciation in share price, earnings, and revenue. And that leads us into recent news. Now, rescheduling an earnings report is not unheard of. I've definitely seen that before. But to do it within minutes of when you're meant to report the same day without giving investors any sort of warning, I find that to be unacceptable. And furthermore, this just out, Ttcf will be missing their 10Q filing deadline, meaning they will not be filing their 10Q with the SEC on time. And this isn't necessarily a huge deal either when you look at it in a vacuum. But when you look at it with context of all the other things we've already talked about, what does this say about management? Does this instill trust? And with that said, I want to look at the valuation for Ttcf, and to do that, I've really liked using the next 12 months enterprise value to revenue ratio, because with growth stocks, you like to look forward, not backwards. So you're looking at the next 12 months. You also use enterprise value, or EV, which accounts for cash and debt in the business instead of just market cap. And then you're also looking at revenues, which is usually the focal point for a growth company. So you can see here Ttcf is trading at about 4.2 times next 12 months EV to revenues. And if you look at Celsius stock, I'll show you, this is Celsius right here. They're trading at 12.9 times next 12 months EV to revenues after their big drop. This is the video I was supposed to do today instead of this one, but now we're doing this one. So yeah, if we compare the two, Celsius is trading at about 3 times or a little more than 3 times the valuation of Ttcf. So 4.2 times 3, that's like 12.6. And this is 12.9. But Celsius also just grew their domestic revenue by 214%, and they grew their overall revenue by 157%. Ttcf just grew their revenues by about 44 to 45%. So yes, it's 3 times the valuation, but Celsius is growing at more than 3 times the rate, and they are also at least somewhat profitable while doing so. And again, there's a lot more ways to look at the valuation between these two, but based on this, I would say that Ttcf is at least fairly valued or slightly undervalued. But even if Ttcf was undervalued, in my experience, when looking at undervalued companies, you want to have a catalyst that's upcoming that will either change sentiment to be positive from negative, or make Wall Street reconsider this stock and really take another look. And with those catalysts usually being earnings and Ttcf having very spotty earnings of late, I'm not confident that sentiment will turn around anytime soon. I know a lot of long-term investors don't really believe in TA, but I certainly think it has merit. I've cleaned up the chart a little bit here. It's probably one of the least important parts of my decision to sell the stock, but I feel like I'll touch on it anyway. So the reason why I touch on it is because you can see that Celsius is at a pretty important level of support here, about the 1570 range. Now you see, if it breaks below this support, obviously that's not great. The next level of support is a bit of a ways down, but I don't want to spend too much time on this because I don't want you to panic. It could very, very easily bounce from here and continue upwards and maybe get some sort of good news and keep going. So don't take this too heavily if you don't consider TA as part of your routine analysis. And I don't want to cause panic with this. I just want to share my reasoning. My reasoning being, I didn't expect earnings to be that great. I expected them to miss, which they ended up doing. And maybe there is a bounce after hours and it'll keep going upwards. But if it does, break down, I'd rather not be in the stock at that point. Now, the final reason I sold is because I simply have too many positions. My portfolio feels over-diversified with 16 positions here, and ideally I want 13 to 15 max. And Ttcf right now is my lowest conviction stock. So that brings us to the lessons learned and the new stocks that I'm considering. I learned that I should trust my gut more when analyzing management. You can believe me or not believe me, it does not make a difference to me, but I did get a bit of an icky feeling when watching Sam Galetti's interview with Roth Capital. I think I've mentioned this before in previous videos too. It felt like he was saying a lot without really saying anything. It felt like he was talking around questions and talking a little too fast, if you know what I mean. Now, I also should have paid more attention to my hunch in terms of competition. In my opinion, their food is average. I know some people really like it, and you don't have to like the product for it to succeed. I might just be in the minority. However, if you look at the freezer aisle, the competition is vast. With Celsius, I drank it and I immediately knew that it was better than any energy drink I had tasted before for several reasons. And their marketing was advantaged compared to other drinks. But with Ttcf, I actually buy Amy's products over Ttcf products. I think they taste better, and the differences in taste, in my opinion, are somewhat marginal. The point is, aside from innovation and a pretty strong brand, I will give them that, it's hard to distinguish what is their barrier to entry or their competitive advantage over other products in the freezer aisle. I wanted to like Ttcf as an investment, and I looked past these things, and I shouldn't have. Finally, don't buy stocks just because they're red. The fundamentals need to be improving. This is a chart of PLBY. I bought in like the low to mid 40s, and it downtrended like crazy. I think I dropped as far as down 56% on my initial investment, and we're still not quite green on that one, but we're green on the position overall. Now, while it was downtrending, they were acquiring profitable businesses to expand their sexual wellness ecosystem. They started plans with Centerfold, an OnlyFans competitor, and they're the perfect brand to do that. They're launching a membership experience with Rabbitart NFTs, which have already generated over 10 million in revenue for the business. And it kept going down and down and down, so I bought and bought and bought on the dip. And now we're seeing the results of that continuous downtrend while the fundamentals were improving. Close to 100% from that bottom at $20. And again, you can see this massive move, 30% today. The catalyst was earnings because earnings were really, really good. Ttcf did have some good press releases this year and to improve their fundamentals, such as the increase of their supply chain capacity and the release of ambient products sometime this year. However, that was kind of overshadowed by spotty earnings reports and, as we talked about, lower and lower guidance for profitability and even revenue. So that's why PLBY recovered from nearly 40% losses to 22% gains, and why Ttcf is still in the red for us here. So yeah, again, there is opportunity cost. What am I going to be putting this money into next that I think could do better over the near term compared to leaving it in Ttcf stock? So this is an Excel sheet, it's a live portfolio tracker. So I already sold my Ttcf position, again, as mentioned at the beginning of this video, but I will delete this row soon. I'm thinking of reallocating this probably into a stock like Lending Club, which is one of my highest conviction plays right now. So I might make it like a top 3 or top 5 position because I still think it's undervalued compared to fintechs like Upstart and SoFi. And also, Next Green Wave is a stock that I'm watching now and doing research on. It's a micro stock, so be really careful. I'm not buying it yet. I will let you guys know if or when I do, but it's really beaten down, right? So I'm not selling TCCF just because it's downtrending. I love buying into stocks that are downtrending because it means they might be cheaper than what they should be going for. And then the other stock is another micro cap. You know, I'm always very wary of investing in micro caps, but this next stock, you'll have to subscribe if you want to hear about it, because I still have a lot more research to do before I bring it to anybody. I may have just partnered with one of the biggest names in the finance industry, so that's a huge, exciting catalyst. But yeah, stay tuned. And again, do not follow me blindly on this one. I mean, it's already up 2% from where I sold, and I am completely okay with that because I considered all the facts that I had and made a logical, reasonable decision that made sense for me, and there's nothing I can do about whatever happens next. I have to be happy with that decision. So I'm sorry we couldn't end on a win with this one, or at least I couldn't. Good luck to everyone else who is still holding. I genuinely wish you the best of luck with this stock. It's an exciting one. It's just not for me. But the good news with investing is that all you have to do to be successful is win more often than you lose, and win by more as well. And so far, we've been able to do that since starting the portfolio and the channel. And remember, no shoulda, coulda, woulda talk. You will not get far in investing if you're always rethinking and regretting decisions that you've made in the past. You've made those decisions. The best thing you can do is move on. Actually, the best thing you can do is take a lesson from it and then move on. Actually, the best thing you can do is download the Hungry Bull right now in the description as well. So genuinely, best of luck to everyone who is still in Tattooed Chef. I am rooting for you guys, and I appreciate all of your support. Thank you so much for watching this channel. And if you want to check out Masterworks and invest in fine art, you can check out the link in the description below. If not, thank you for being here. Subscribe.